Hi, welcome to the Financial Fox, a special show today as we are discussing Bitcoin with Michael Hudson, CEO for Bitstocks. Hi Michael, how are you?
Very good, thank you. You?
I'm fine. I was thinking, when we met 10 months ago, Bitcoin was trading, I think was $1,000.
Yeah.
And now we are sitting here and it's over $7,000. It's not that crazy.
It is insane, and I think for the most part, people at the beginning of this year wouldn't have anticipated such an aggressive increase in the Bitcoin price. But what this has shown is just how much institutional money is now geared around the cryptocurrency space. Overall, the market for the whole cryptocurrency industry began this year at sub $30 billion, comfortably below sub $30 billion. We're now at in excess of $200 billion. There's an incredible amount of fiat currency being deployed in this whole space, and Bitcoin soaked up most of that value.
And we have a new hard fork coming up later in November. What are your forecasts on this?
Well, there's a lot of different facets with hard forks. This one in particular is quite contentious. So the argument around this hard fork and what this hard fork was ultimately trying to resolve is when we once had a time when we had only one chain of Bitcoin a few months ago prior to the birth of Bitcoin Cash, the two different camps, opposing camps, were do we scale on-chain on the Bitcoin blockchain, or do we build solutions and layers above the Bitcoin blockchain in order to scale and facilitate a global payment network? These two camps have very competing ideals as to how to achieve the same objective. What the New York agreement was all about, and this is what this hard fork is about with SegWit2x, we're trying to unite these two camps and find a middle ground, a compromise. So what was put together, the suggestion was we go for 1 megabyte blocks in Bitcoin, which theoretically gives you around about 3 to 4 transactions a second, and we'll increase that to 2 megabyte blocks, effectively doubling the amount of transaction throughput on the Bitcoin blockchain. And also, in combination to that, is they'll include SegWit on this adaptation of Bitcoin as well. So one camp who was just pro-SegWit, which enabled off-chain solutions, and the other camp which just wanted larger block size. This was meant to be a middle ground and a compromise to push this forward. When we had the split of the network a few months ago with Bitcoin Cash, those two camps were ultimately satisfied. You had SegWit on the original legacy chain of Bitcoin, enabling what that camp wanted, and they can now build out their model of scaling Bitcoin off-chain. And then you had the big block solution, which is Bitcoin Cash, which actually started with 8 megabyte blocks and have a very aggressive schedule to scale the Bitcoin network on the actual Bitcoin blockchain. So the reason why this New York agreement is being pushed through just because a few CEOs in a room in New York agreed to something at a completely different time where we had a very different scenario. Now that scenario has evolved and we now have the two different separate camps, there is no fundamental reason why this hard fork should proceed. However, the masses, a majority of retail investors, see this as an opportunity to get a duplicated coin balance. And that has become almost a bit of a urge and a buzz in itself with cryptocurrency investors, in that they see hard forks as a bit of a bonus. And what you see is the price tends to rally up leading up towards these hard forks because you consolidate your money on that one chain, that when the chain does split, you'll get a duplication of your coin balance, and then you might see a drop off of the Bitcoin price.
So what do you expect the value of Bitcoin to be, let's say, in 6 months?
In 6 months, I think it's very realistic to have a Bitcoin price between $11,000 to $13,000 around that time frame. Reason being is the institutional money is very, very much geared around Bitcoin right now.
We see the financial industry is quite divided about the future of Bitcoin. We see the price of Bitcoin keeps soaring, so it's seen as a great investment with high returns. But from the other side, is that a bubble really? How many people are actually using Bitcoin? What population is going to adopt Bitcoin? I just would like to understand a little bit more about the consumption and how realistic is going to be the Bitcoin is going to be adopted by a broader population.
That really is the ultimate question, because as it stands right now, you have a large amount of people within the space will claim that Bitcoin is not in a bubble. And I, for the most part, agree with that. The issue is what version of Bitcoin is it that you're speaking about? Because if you really boil down and you look at Bitcoin for what it actually is right now, and you take your idealism out of the equation, you take your personal feelings and your emotions that you've gathered and gleaned over the years of supporting this movement out of the equation, and you look at Bitcoin for what it actually is. It is a network which right now will charge you $5 in order to send any form of value over the network. So if you're sending $20, then you're paying an exponential amount in fees, 20% in fees to send $20 worth of value. You correlate that to the projects that have been built on top of Bitcoin. We've seen an absolute stagnation and a complete tailing off of projects being built on top of the Bitcoin blockchain over the last few years, as soon as we actually had this fee issue within Bitcoin. So great, amazing projects like tipping over social media, which if I'm going to send somebody a beer, or if I say, I loved your tweet, let me buy a cup of coffee on me. Well, I'm only going to send you a couple of dollars. Well, if I send you a couple of dollars, that means the fee that I pay in order to send you that couple of dollars should be negligible at best. It used to be that way. And then we had projects that were being built on top of this infrastructure that would have underpinned its value because it provides additional utility. The utility of Bitcoin today, and it pains me to say this, and I'm still incredibly bullish on Bitcoin, but the utility of the main legacy chain of Bitcoin today, for the most part, genuinely is actually speculation. And the reason why that speculation isn't misguided is because if you look at blockchain technology, what underpins the value of a blockchain technology and secures it is the hash rate. Right now, the legacy chain of Bitcoin has exponentially more hashing power than any other blockchain. So if you are going to store value in this digital new economy, Bitcoin is still the place in which you do it. Does that mean that it's going to be the technology that ushers in a new age? No, I think Bitcoin Cash has a strong argument for that.
So let's look at some economies, for instance, like Venezuela, where cash is becoming useless. I mean, how do you see the expansion and how Bitcoin can counter inflation, for instance?
Well, Bitcoin already naturally counters inflation due to the fact that every single block introduces new money into the system. It's pre-programmed mathematically. Bitcoin proves itself in these scenarios as ultimately an antidote. I always like to explain Bitcoin as why was it birthed in the first place, right? Ultimately, Bitcoin was introduced to the world as an antidote to a very sick system. When we see the failures of this very sick system, Venezuela being the one at the forefront of most people's minds right now, social issues rise with that, and people start looking at these scenarios and these economies and these situations that derive and come forward and think, okay, well, what is a potential solution to this? How can Bitcoin actually resolve these issues right now? Bitcoin is already saving lives in Venezuela because it's a means and mechanism of sending value to and from. The issue is that right now on the Bitcoin network, if you look at it on a global scale, we can only process, if I'm not mistaken, 226 million transactions theoretically on a per annum basis, right? We have in excess of 7.5 billion people on this planet. We don't even get one transaction a year each. So if you look at Bitcoin from that aspect, can Bitcoin right now in its present state resolve world economic issues? No, it can't. Because what you need to actually have is the utility and the transaction throughput. And this is what is underpinning this whole argument, right? So right now, yes, Bitcoin is helping people in Venezuela, and it will continue to do so as a store of value.
Yeah.
But as a means of transaction and as a currency system, it is a long way off. And the issue is the vision of the development path of where Bitcoin is going right now. It's going to be years until they resolve it in a way that they're planning on resolving it with off-layer solutions. What can be enacted upon right now, what is being trialed with right now, what is being successfully tested with right now is the ability to process more transactions per second than even the Visa network. The developers and the people who are working very much now on Bitcoin Cash are already modeling these things, and these things can actually be implemented today with pre-existing hardware that we have today. So the real question is yes, you can store value, so people in Venezuela can store value, but in order to really rectify these scenarios and actually provide people an outlet, is the utility has to be there. And Bitcoin has a huge mountain to climb in order to be a global system of that scale, which is why we here at Bitstocks, we have a very strong interest in the future development of projects like Bitcoin Cash.
Yeah, that's great. But let's talk a little bit about the blockchain, which is the technology behind the Bitcoin. I mean, how that is going to shake up and probably overthrow all the existing system. I mean, how government is going to deal with those issues? What are going to do central banks? What the system is going to do in order to cope with the development of Bitcoin and blockchain?
Well, my personal view is banks will not disappear because of this. They'll just be re-engineered. Same thing that happened with the internet. Pre-internet, the dominant industries were telecommunications, and you had juggernauts within that space, right? Here in the UK, BT was and still is the juggernaut when it comes to telecommunications. But if you look at BT's business model pre-internet, they were just solely telecommunications. Now BT is one of the largest, if not the largest, internet service provider in the country. They morphed it, adapted, they changed their business model, and they built it on top of this new technology called the internet, which originally threatened their existing business model. And they just placed it on top of it. And now their telephone lines are pretty much fundamentally done through VoIP, right? So they've embraced that new infrastructure and technology, and they've pushed themselves forward. Banks are going to do the exact same thing. The issue is that the larger a bank is, the more difficult it will be for a bank to encompass this technology and place it on top of it, which makes it great for smaller banks, startup banks, entrepreneurial banks who can build the infrastructure from the ground up on top of this type of technology. These will be the banks that will provide this kind of service, because right now this space is very much run by investors, speculators, and engineers, right? As much as this space is booming this year, we're still very much a minority in terms of world population. How do we entice the rest of the world, the rest of the 99%, to utilize blockchain and Bitcoin technology? Banks are going to be a huge part in this journey, because they're going to be the companies who ultimately make interacting with this technology completely hidden. It needs to become ubiquitous. Companies, banks being a strong part of that are going to be a huge part of pushing this technology forward. And it is going to be that whole notion of adapt or die. And this is why we're kind of having this power struggle kind of play out right now, where you're getting certain major CEOs of banks, Jamie Dimon, coming out demonizing,
saying that he's a fraud, and then the share price, the price collapse.
That clearly shows me that that's the dinosaur that doesn't want to evolve and put his new infrastructure on top of, put his existing infrastructure on top of this new infrastructure. And that's fine, because the market mechanisms are going to be what fundamentally decide what the outcome is of this.
I was reading something really interesting on the Telegraph. Is a guy that basically is willing to sell his house for bitcoins. I mean, that's quite, it's a crazy thing, but you know, it just shows that things are really changing.
And that's a very intelligent play, because from both sides, right? I think in the UK, most house purchases above 10 million are predominantly purchased by foreign investors. Right, so Russia and the Chinese being large numbers in that. Now, if you're in China right now, how do you get in excess of $50,000 out of the country, right? And what asset are you going to invest in order to build up a portfolio out of your country? If someone in London offers prime real estate and offers Bitcoin as a payment mechanism, his incentive for doing so is he can now charge a premium, because the market that he just opened himself up to by utilizing a global payment system is far wider and more vast, with different circumstances that will pay the premium on the property price that he's actually put on his house. So a Chinese investor is going to look at it and think, okay, well, it might be a little bit more expensive than if I went down the fiat route, but guess what? I can't get $18 million worth of value into London anyway, right? So it's a very, very interesting market now that is developing, where we're now truly entering a global system, a global economy, which is going to be underpinned by this global operating system we call the blockchain. So it's just going to open up so many different markets.
Okay, Michael, thank you very much.
Thank you.
Well, I'm sure that all the investors are going to look at Bitcoin very closely now, you know, for the big rise over the next 6 months. Thank you very much. This is everything from the Financial Fox. I see you next time.